Welcome back. We're going straight to the phone line. Sue in Waterdown, Ontario. Go ahead, Sue. You're on the line.
Oh, hi. Good morning, or good afternoon, I should say. David, I was just wondering about Suncor, what you think of the entry point here. I'm in no urgent need of jumping in, but it is close to my target of about $35 to get in, and I like the dividend, but I'm concerned about the sector and what you think where it's going in the next little bit, because I can wait. Thanks so much. Oh, and the street consensus, please. Thank you.
Sure.
Okay, so I'm going to speak out of both sides of my mouth just for a moment. If you look at the history of a collapse, it tends to be like the tech wreck or the banking crisis. When you have a significant sort of two-thirds decline in a sector, almost always there will be an immediate knee-jerk significant rally, which is people who are looking for their money back, right? Looking for the strength that had been in the market previously. And of course, we've seen the price of oil come from 25 to 50, and there's been a significant recovery in energy shares. So the question is, are prices going considerably higher? And I question that because realistically, energy production has become mass manufacturing. When you drill a hole today, you get a 99.8% chance of success. And so with that, capital is available if a company could hedge its production above the cost. So I think it's very possible that we could, around the cost of production, see the price of oil sort of stall out.
And that's where we are right now?
Which is sort of where we got to at $50. Okay. And when we got to 50, you saw companies start to drill again, right? So that is one outcome, and that is what history would tell you is most likely. That being said, we are in a little stronger economy. Demand is picking up around the world. And it's possible that you could see prices sort of exceed that and get to $60, $65. So I'm unsure right now. In February, we bought energy for the first time in a couple of years. We do own Suncor, we own CNQ, we own a number of companies, those with really strong balance sheets that will do fine whether or not price is solid because they'll buy assets.
So you're not looking to chase this
I'm not
down
sure
the
whether
risk
it's a
spectrum.
trade or whether it's a longer-term investment. We stay in them as long as they work, and we use stop losses to take us out. So I think it's unclear at this point. I'm not sure I would chase anything right now, and I would not go down the quality curve because it's possible if prices stay down here and people's hedges roll off and come to an end, that they could wind up selling it below their cost. But I think Suncor is going to be fine, and I think CNQ is going to be fine.
Sue, the consensus is about 63% of the street has a buy rating, 30% has a hold rating, and only 7.5% with sells. And the average price target suggests about 15.5% upside from here, with a 12-month target of $41.35. Jerry in Vancouver is on the line. Go ahead, Jerry. What's your question?
David, can you please give me your view on Magna International?
Sure.
I guess the consensus seems to be that the auto industry has peaked and that cycle will start to go down. But it's not going to go down to 8 million vehicles, for sure, for half of what it is right now. And yet Magna seems to have slipped down quite a bit from its high of $73. Right. So what do you see happening with it looking forward for the next year or two? And would you be a buyer, seller, or a holder of this one? And Amber, can you give us a street consensus, please?
Okay.
Sure thing.
So Jerry, I'm going to give you my opinion, and then we're going to talk a little bit about the market, what the market's telling you. Our opinion is that relatively low oil prices and relatively low interest rates are great for the U.S. consumer, and ultimately that the consumer looks pretty strong. Consumer confidence is strong. If you look at retail, RTH, the ETF for retail companies, is trading very close to the highs. So the consumer looks in pretty good shape. There is, I think, a question mark around auto sales that the market is posing right now. Magna's not on its own. If you look at Linamar, if you look at Martin Rea, if you look at any number of the big auto parts companies, they all have been challenged. So I would prefer to see the market show me some belief in this group before I put money to work. Because...
And what does that look like? Is that an uptick in
Well, I think that, for instance, right now, if you look at it in the most simple terms, just from a price perspective of the shares, the long-term moving averages and the short-term moving averages are all moving lower. And this is in a market where right now there are lots of sectors that are performing well. So if you're in a stronger market's making new highs, don't be afraid to trade up. Don't be afraid to go to what's working, because likely what's working today continues to work. Now, not to say these auto parts companies can't get turned around. I think that they probably will. It's just, I don't really believe in saying I'll invest in what I think should work. I'd prefer to invest in something that is working already, where the numbers are getting better, where the price is doing what it should be doing, given what we think we know. I think that you'd be better off to focus on say something in technology, something in industrials. There's other industrial type names that actually look quite attractive, like the defense companies.
Okay, to your question on consensus, 13 buys, 6 holds, no sells, 12-month return potential of nearly 30%. The price target Canadian dollars is 63.25 on a price of Magna that is around $50 right now. Hope that answers your question. Stay tuned. Past picks are coming up next.